Left side.
Yes.
Good afternoon, everyone. I am Neha Behel, the Company Secretary and Compliance Officer of RACL Geartech Ltd. On behalf of the company, I would like to extend a warm welcome to all of you to this post-results conference call for the fourth quarter and the financial year 2024-25. I will be your moderator for today's session. Before we begin, I would like to make a few important announcements. Please note that this conference call may include forward-looking statements based on the company's current beliefs, opinions, and expectations. These statements are not a guarantee of future performance and are subject to various risks and uncertainties, which may cause actual results to differ. Additionally, all participant lines will be on mute during the presentation, and we will have a question and answer session at the end of the presentation, where you can ask any question that you may have. If you need any assistance during the call, you can submit your questions via Q&A box or raise your hand as per the available options on the screen, and we will assist you accordingly. Please be informed that this call is being recorded. We are pleased to be joined today by the management team of RACL Geartech Ltd, represented by Mr. Gurcharan Singh, Chairman and Managing Director, Mr. Jitendra Jain, Chief Financial Officer, Mr. Prab Mehar Singh, Vice President of Business Excellence and Finance. With that, I now invite Mr. Gurcharan Singh for his opening remarks. Over to you, sir.
Hi, colleagues. Good afternoon. So first of all, we are sorry that this time the call was a bit delayed as per our general schedules being held earlier. Reason was closure of annual accounts and many other issues related with preferential allotment, which all of you are quite aware. So, but nevertheless, late than never. So I welcome you all, and I know that this time there are many participants attending this call. So it really shows continued trust and confidence of all of our investors' fraternity into the company management and operations of RACL. So we're really very glad to be associated with you, all such interactions. And definitely, before we start our formal discussions, which normally starts with a PowerPoint presentation, I will only say that we are actually on the right track, and company is really on the path of growth. Once again, last year was a bit flattish because of the global scenarios, but yes, now things are really looking up. And during the course of discussions and deliberations today, we'll be able to throw more light on how things are looking up in the future. Thank you once again for joining this call, and I'll hand it over now to JJ and Prab for taking over, starting with presentation. Thank you. Yes, over to you, Prab and JJ.
Good afternoon, everyone. Yeah, so this is the snapshot of your company. We are a 1983 established company. FY'25, we achieved clocked a turnover of 4.27 billion, close to $50 million. We have 811 employees. Our product applications are across all the segments, whether it's two-wheelers, three-wheelers, passenger cars, commercial trucks, ATVs, agricultural equipment, and all. Our corporate office is headquartered at Noida. We have two manufacturing locations. One is at Gajrala and other is at Noida. And we have 3 warehouses in Europe. Our product range spans across transmission gears and shafts, sub-assemblies, precision and machine parts, industrial gears and chassis parts. We are A- credit rating by CARE. We are listed on both the stock exchanges of India, and we have one subsidiary based at Austria. Our core competencies lies in all the precision manufacturing, machining, aluminum machining, gear cutting, across all this framework which you can think of in the automobile components. We have all the certifications which a manufacturing entity requires, including ISO, TIE 6 and this time we want to introduce our board of directors. So we have a seasoned team of board of directors, starting with Mr. Gulsharan Singh. So as you all are aware, he is the chairman and managing director of the company. Mr. Singh is a diploma holder in mechanical engineering with PGD in export management. Sir has been serving RACL for more than 32 years now and is actively involved in the various stages of growth of RACL. He is the chairman and managing director of the company and managing the overall operations of the company. And coming to our executive non-independent directors, first is Mr. Anil Sharma. So Mr. Anil Sharma, he is an engineering graduate, B Electrical from the University of Roorkee, and having postgraduate diploma in management from All India Management Association, New Delhi. He has retired as a general manager of Pickup, a state-level industrial and development corporation. He has a wide experience of more than 37 years of project development, implementation, and follow-up in different segments of industry, practically in the automotive components and telecommunication sectors. Other executive non-independent director is Mrs. Narinder Paul Kaur. So Mrs. Narinder Paul Kaur, she's done a Bachelor of Science from Kurukshetra University and Master of Arts from Punjab University. Mrs. Kaur is looking after the functioning of Noida plant of the company since 2011. So these are the two executive non-independent directors of our board. And coming to the non-executive independent directors, first, Mr. Jagdish Keswani. Mr. Keswani is a MBA Marketing from FMS Delhi in 1988 and BE Honors Mechanical from NIT Kurukshetra. He is a strategic planner and implementer with an experience of over 39 years. He has worked in quality operations, new project management, and vendor development functions with Escorts Yamaha motorcycles. Subsequently, he headed the business development function for TVS Sundaram Fasteners. He also established a business operations of a German MNC at Gurgaon as managing director, taking care of P&L, operations, business development, and marketing. The other director is Mrs. Malini Bansal. Mrs. Bansal is a certified associate of Indian Institute of Bankers and has a master's in education. She is retired as a chief general manager at IDBI Bank Limited. Mrs. Bansal worked for over 34 years in project finance, government banking, stressed asset financing, and wholesale and retail banking. She demonstrates a deep understanding of development financing, banking principles and practices. She is also on the arbitrators panel of NSE and BSE and has handled over 40 arbitration proceedings. Mr. Shashank Anikindi, he is an inspiring leader in the Indian automobile circuit for last 45 years, having graduated as a mechanical engineer. He has introduced many new models in the auto industry and having widely interacted with multiple global clients and organizations. He has experience of over 35 years in various auto component industries. During his career, he is associated with several leading automotive companies, including Tata Motors, Hindustan Motors, and Eicher Motors. He later served as a CEO of Asia Motor Works in Mumbai. Lastly, he held the position of executive director at Piaggio Vehicles. And last but not the least, Brigadier Harinder Pal Singh Bedi. Brigadier Bedi is a senior army veteran with 10 years of experience as a corporate professional. He has been associated with a few prestigious projects and ventures, along with being a CSR enthusiast. Brigadier Bedi is a graduate from Defence Services Staff College, Wellington, and a Master of Defence Studies from the Madras University, with distinction along with Masters in Management Studies from Osmania University, Secunderabad. Now coming to the financial performance. So FY 24-25, we clocked a turnover of 427.29 crores, out of which export turnover was close to 291 crores and domestic turnover was close to 93 crores. The other operating income was 33.43 crores. and other non-operating income was close to about 10 crores. So this is a brief breakup of the business share and the product distribution. So out of the total distribution, the export business contributed about 68% of the turnover this year, and domestic was about 32%. Out of the total turnover, we are catering to European customers. Our 56% of our turnover was towards European customers, and 42% was in India and Asia Pacific region. A very small, minuscule was 2% was to US and Canada. Now coming to the breakup of segment-wise breakup. So as we have been indicated in last 2 years and all, so this year our two-wheeler segment was about 39%. Commercial vehicles has grown to 18% now. Passenger car vehicle business is around 14%. But I just want to clarify here that this passenger car vehicle 14%, out of this 9% was in the EV segment. The next is the recreational vehicles, which is ATV and RTV, which is about 13%. Then for closely following is tractor and agriculture business, which is about 11%. And then industrial and other three-wheeler businesses 2% and 3% respectively. Now coming to the quarterly financial performance, quarter 4 of FY'24-25, we clocked a turnover of 106.03 crores as compared to 114.92 crores same quarter last year, which is a drop of about 7.7%. At EBITDA level, we have been able to clock almost a similar EBITDA, 24.05 crores of EBITDA in Q4 of FY'24-25 as compared to 24.45 crores last year last quarter, which is a drop of about 1.6%. But at the PBT level, we clocked a PBT of 8.95 crores in Q4 of 24-25 as compared to 11.53 crores in Q4 of FY'23-24, which is a drop of 16.87%. Now coming to the full year performance. So YOY FY'24-25, we clocked a turnover of 427.29 crores as compared to 423.04 crores, so which is a growth of 1%. At EBITDA level, we clocked the EBITDA of 93.74 crores as compared to 101.92 crores in FY'23-24, which is a drop of 8.02%. And at PBT level, we clocked a PBT of 34.37 crores as compared to 53.74 crores in FY'23-24, which is a drop of about 36%. So these are the ratios. Basically, current ratio is from 1.09 to 1.05. Debt equity has improved a bit from 1.37 to 1.29. Interest coverage from 4.31 to 3.18. Fixed asset turnover improved significantly from 1.39 to 1.33. Total asset to debt is about 2.06 to 2.15. DSCR, because of low profitability, a bit from 1.14 to 1.09. And debt to EBITDA from 2.76 to 3.14. We have been able to generate cash from operations. So that is cash from operations of about 63.96 crores as compared to 26.73 crores in FY'23-24, which is a growth of almost 140%. Coming to the debt exposure, so as have been indicated last time, so our total debt has increased from 281 crores in totality to 294 crores. As we had guided last time, our long-term debt has come down from 105 crores to 85 crores. And our short-term debt has increased from 176 crores to 209 crores. I just want to clarify the short-term debt also includes the CP Ltd of the current year. So in totality, the total debt has increased from 281 crores to 294 crores. I want to highlight here that total addition to fixed assets in FY'24-25 was close to 54.31 crores. But our debt has increased by only 4.4%, as we have guided earlier. Now margins, gross margins 71.09% as compared to 71.06% FY'23-24. EBITDA margins, we have clocked close to 22% as compared to 24% in of FY'23-24. PBT margins of 8.04% as compared to 12.7%, and net profit of 5.99%, close to 6% as compared to 9.41% of FY'23-24. Return on capital employed from 11.57 to 21.12. So this is a brief snapshot of all the ratios for financial year 24-25 as compared to financial year 23-24. Now coming to the profitability comparison, as so this we have been introducing these slides for last few quarters. So as you can see, our profitability, EBITDA margins, we have been able to sustain close to 21 to 22% quarter on quarter, as we have maintained in our last few calls. But FY'21, 24, 25, EBITDA margins was close to 22% as compared to 24% of FY'23, 24. But if I talk about the broadly breakup of this from Q4 of 23, 24, our raw material consumption, it has reduced by 2.18% because we have been able to get the benefit of steel price reduction. And at a full year level, the consumption of raw material is almost at a similar level. As we have indicated in our last few calls, our employee benefit expenses, finance cost, and depreciation have increased. The percentages are there as in line with the projected turnover which we were projecting for FY'24-25. I want to highlight on the manufacturing expenses side, as we have indicated last time that we have been working on the cost reduction on the power side and other components of manufacturing expenses. So from Q4 of 23-24, and if I compare Q4 of 24-25, our overall manufacturing expenses have come down by almost 3%. And at a full year level, they are almost at a similar level. But now from Q4 of 24-25, the reduction will be visible. Our total administration, selling, and other expenses have gone up by 22.68% as compared to Q4 of 23-24, whereas at a full year level, they have increased by 1.23%. So that's a breakup of the profitability comparison component-wise. Now coming to the business updates. So as you all are aware, the company has done a fundraising through preferential allotment of equity shares. So I just want to apprise everyone. So company has issued 10,06,480 equity shares to QIBs and non-QIB investors under non-promoter category. The company has raised an overall fresh capital of 79.99 crores, which has been infused in the company through preferential allotment. I'm very proud to share that 3 marquee investors and investor group of India has shown their trust, and they have invested in RACL Geartech. And I just want to apprise everyone that the entire proceeds of the preferential allotment, after meeting the general corporate expenses, will be utilized to reduce both the long-term and short-term borrowings of the company. So I'll come to the brief profile of investors. First, so as most of you will be aware of, the first investor who has invested in your company is Malabar India Fund Limited. Malabar India is a $1 billion plus investment fund. They have been investing in small and mid-sized companies of India since August 2008. Their average holding period historical has been close to 7 years. Malabar's leadership has a team of 14 professionals, and with over 100 years of combined investment experience. They have a concentrated portfolio of the companies with high return ratios, strong cash flows, robust balance sheets, and competent management teams. The other 2 investors are India Econ Fund Limited and Ashoka India Equity Investment Trust PLC. Both these funds are part of White Oak Capital Group. Now, White Oak Capital is an investment management advisory firm established by Mr. Prashant Khemka in June 2017. Mr. Prashant was formerly the CIO of Goldman Sachs Asset Management India Equity and Global Emerging Markets Equity Businesses. White Oak Group has operations across India, Singapore, Mauritius, UK, and Switzerland. White Oak has attracted among the largest portfolio investment inflows into India over the last 3 years. White collectively White Group entities, they collectively have assets under management of 8.6 billion US dollar or 73,630 crores Indian rupees as of March 2025. And their global client base includes sovereign wealth funds, pension plans, endowments, individual and family offices of through a combination of separately managed accounts and investment funds. The third non-QIB investor is Dr. Aniruddha Malpani. Dr. Anirudh Malpani is an IVF specialist and the founder of angel investment fund Malpani Ventures, which invests in early stages startups. Malpani Ventures is a sector-agnostic angel investment firm funding frugal innovation in India. They partner with founding teams building great companies. They fund revenue-making companies to help them scale. Their portfolio includes education, healthcare, financial inclusion, and software. Now coming to why we did preferential issue. So the rationale, as we have shared earlier, that company need to invest a reasonable capex based on the new orders, the new big orders which we have received and all, and the kind of RFQs which we are receiving and all. The company is required to invest a reasonable capex into the company in next few years. And as we have been indicating earlier, and as guided by a few of our investors, the company wanted to reduce our dependence on borrowed funds to achieve the planned growth. This reduced dependence on borrowed funds will help company to have a stronger balance sheet position for the long-term sustainable growth. This divestment will also, put a sharper focus on the company to have the disciplined capital deployment and value accretive segment. The impact is, as I have shared earlier, the entire proceeds of the preferential allotment have been utilized to reduce both long-term and short-term borrowings of the company after meeting the general corporate expenses. Now, this reduction in debt will help the company to achieve the interest cost reduction, which will help in enhancing the profitability of the company and which will free up the internal accruals of the company for the reinvestment into the company. And it will also strengthen the debt profile and improve the credit matrix for your company. The way forward, as we have always indicated, we will keep on. We want to achieve our long-term strategy. It will help in achieving our long-term strategic objectives. We have to do the technological upgradation, backward integration, and the planned growth which is there for the projects which are already nominated by the customers. This will help the company in consistent and sustainable growth with optimal capital deployment. And as indicated earlier, the company will keep on focusing on product and segmental diversification. Now, one more event which has occurred with RACL. So the one of the company which was part of promoter and promoter group, the Pardesia Industrial Investment Corporation of UP Limited, Pickup, they have sold 5 lakh equity shares in the open market. So now the revised shareholding pattern post preferential issue and divestment by Pickup, Mr. Gulsharan Singh and his affiliated parties, now they have shareholding has reduced from 37.36% to 34.16%. Pickup shareholding has reduced from 13.94% to 8.51%. So total promoter holding has come down from 51.3% to 42.68%. And public shareholding has increased from 48.7% to 57.32%.
I will add it over here that yes. Pickup being a state government investor, so they had actually, UP government had a policy to promote industries in the state, and by virtue of this, they were investing into the companies. And when companies go stable and companies start earning good profitability in the market, so they always have a divestment policy. So Pickup was actually contemplating to divest their shares for quite some time, since now price was quite reasonable, and eventually they decided as per government policy to divest from the profit-making companies, because once the projects are stable, so government mandate is to get out of those industries. So in a phased manner, they have decided to hive off 1/3 of their equity held in RACL. Initially, it was about 13%, now it's about 8.5%. This is as per the government policy. Just
Sure. Thanks, sir. Thank you. So, next thing which we have been discussing in last couple of calls is the status of KTM business. So we have an update on the KTM business, though it is there in all the media articles and all, but just wanted to brief everyone on the same. So Bajaj Auto will acquire majority control of of KTM AG through its wholly owned subsidiary Bajaj Auto International Holdings BV. Now BHI HBA has committed to a total investment of 800 million euros, which is about 7,765 crore of rupees, through a combination of secured term loans, convertible bonds, and shareholders' debt. This funding will be utilized to stabilize the KTM finances and will also be utilized to support the court-approved debt restructuring program and providing the working capital to KTM. These financial measures will help KTM to meet their court deadline of May 23rd, 2025, by which time the KTM has to repay 30% of the creditor claims. Now, this acquisition will marks a significant milestone in Bajaj Auto international strategy, and it is expected to support KTM financial recovery and business operation. To everyone's information, the two companies already collaborate under a joint development program based in India. Coming to RACL, we have already started receiving a confirmed delivery schedules from KTM AG. Based after this, the production had started at their factory. However, we are still adopting a precautionary approach till the time the KTM is stabilized fully.
You should have put Bajaj logo also there. But as a proud Indian, we must all be very, very proud that one of the Indian big automotive industry has come to rescue of a global brand, which is KTM in Austria. So as an Indian and as a Indian industries, we really feel very glad that yes, Indian industry also is coming to shape, because it all started with Tata's, who rescued Chorus in the UK, and then Jaguar Land Rover again in the UK, and now Bajaj has come forward to rescue KTM. So we all Indians must feel very proud, very glad, and it really shows maturity, a come of level, a come of strength coming into Indian automotive manufacturers. So that is a moment of pride for all of us. Yes, sir.
Thank you, sir. So update on the new projects. Project Titan, as you are all aware of, we have already started the commercial production at a new manufacturing facility, Udyam. Wanted to update everyone that as
not commercial production, it is a pre-series
production. We have more than 2,000 sets are already dispatched to the customers under 2 phases. These parts are currently under vehicle validation stage at the customer side, and the mass production as of now is on track to be started in August 2026. On Project Venus, as we have disclosed earlier, this project is for the supply of drivetrain parts for electrical sports car. To update on the same, we have more than 100 sets have been dispatched to the customer under phase 1. Again, these parts are currently under validation at the customer side, and the mass production of this project is also on track to be started in August 2026. Now, third project, which is the new project which is going on right now, is Project Crystal. This project is focused on development and supply of critical components, including ring gears, sun gears, drive gears, and planetary gears assemblies for electrical power steering systems in the passenger car segment. This project is to supply steering system tailored to the requirements of a leading American passenger car OEM for their pickup truck platform. As disclosed earlier, the first prototype was to be manufactured and offered for assembly and testing in Q2 of FY'25-26 from RACL Gajrala plant. So just wanted to update everyone that this project is on track and the samples are in advanced prototyping phase right now. So these are the updates on all the 3 new projects which are ongoing right now.
Just to add over here, as this project Titan and Venus, this is already known to all our investor friends. They are for BMW as our prime customer for Project Crystal, since it is still not disclosed, so but it is one of the top American customer. But this is also significant milestone in our company. This is a kind of diversification program because this Project Crystal is for steering components. So technically, it is again fuel agnostic. Whether it is a fuel, whether it is a EV or a hybrid or hydrogen or anything, steering will remain more or less the same. So it really gives us a very significant progress or growth towards our diversification program to other than gears and transmissions or engine factory. So this is also a very key milestone in RACL's future growth strategy. Yes.
Thank you. On the awards and recognition, I'm happy to share that your company's got an award by EEPC India during the Northern Region's 52nd and 53rd Export Excellence Award. We have been recognized as a star performer in Automobile Component Product Group under Northern Region Export Excellence category. We are proud to share that this award was presented to us by Honorable Chief Minister of Delhi, Srimati Rekha Gupta. This ceremony was further graced by Dr. Philip Ackerman, German Ambassador to India and Bhutan, and Shri Vimal Anand, Joint Secretary, Department of Commerce, Ministry of Commerce and Industry, Government of India. This recognition is again a testament to our consistent performance and excellence in export segment. Another milestone for your company, we conducted a Bhumi Pujan for our new manufacturing facility at Gajrala on April 30th, 2025. This again marks a significant milestone in our growth journey and reflects our commitment to expanding our production capabilities. This facility is being developed as a part of our strategic initiative to enhance manufacturing capacity in anticipation of the future business projects and to better serve our domestic and international markets. This expansion will also enable RACL to meet increasing demand, support new product lines, and further strengthen our position in the automotive component industry. Thank you, everyone. And now over to you.
Questions?
We don't have We will now begin with the question answer session.
Yeah, you know, unmute करके 1 2 3 होगा उसमें ना people इसमें finding है तो first वाले unmute 1 2 3 first
Mr. Parakshit.
Unmute. Hello.
Mr. Parakshit.
Hello.
We
Yes,
have
hello. Am I
unmuted
audible?
Yes.
Hello, am I audible?
Yes, you're audible, Parikshit. Go ahead.
Okay, thank you so much for giving the chance, sir. So I had a few questions. So my first question is about KTM. So if Bajaj has acquired KTM, so won't they will source gears which we are supplying to Bajaj to KTM? So won't KTM source the gears from Bajaj only, or they will still take from us?
Parikshit, I will answer you. First of all, Bajaj was already owning 59% of KTM, 49% of KTM. It's not that Bajaj is a totally new entrant. Bajaj is holding KTM as a company with a 49% equity for last 20 years. So even then we were always a supplier to KTM, and this Bajaj has come to rescue. Technically, Bajaj has infused further funds to make the company strong. But taking over the company is a different thing, and doing business is a different thing. So that is not an issue at all.
Okay. 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 Thank you so much. So my second question is, so currently, few days ago, we read that Trump is planning a 50% tariff on European countries, and our major customer is the US only. So, so if 50% tariffs are implemented, so the won't be demand scenario be affected from our point of view.
Probably you also read that courts have stayed all those tariff drama going on in the US. So eventually, as of today, everything is put on hold. So, and if anything is happening, it's not going to happen only for RACL. It is going to happen for the entire globe. But believe me, these kind of things are more of political in nature. They are not having any real impact on day-to-day business scenarios. Okay. And as such, as on today, this decision is already have been put on hold by the US courts.
Okay.
So
Thank you
eventually,
so much, sir. Yeah, yeah, yeah. Okay. Okay. So, sir, I had just one last question. So the tractor volume this year, Q4 FY'25 have been grown by 7%. So how are you seeing the demand on the tractor side?
you are right. The tractor volumes were quite good in Q4, and India has this time the record kharif crop. So eventually, demand should remain stable, and it should grow. And eventually, we'll also be benefited because one of our major customer is a Scott's Kubota. So
Yeah.
they are showing good forecast, and we're having our second major customer, Summit Roads, far in south of India. So they are also showing good forecast. Yes, things are looking good for the agriculture market. And it's not only in India, even in European market, agriculture product demand is showing signs of recovery.
Okay. Thank you so much. And sir, just one last question. So you in previous calls you said that we are confident of achieving 1,000 crore revenue in 3-4 years time. So can you tell me the vision or the path which you see forward to achieving that figure, the
So
1,000 crore of revenue?
you yourself have answered your question. So we already said that we have a vision to achieve 1,000 crores turnover in 3 to 4 years time. So that vision is already there. And now only thing is the roadmap has to be there. And yes, roadmap is there. We have already explained in the presentation. Our CFO has explained to you. We have alternate new diversification programs and addition of new customers. Yes. So we are working, the entire team is working to ensure that whatever the vision is there, that roadmap is also drawn accordingly.
Thank you so much. Thank you.
Thanks, Parikshit. Thank you.
Mr. Dev Chandra Ramani. Sir, we are unmuting you. Mr. Ramani?
Yeah, hi. Thanks for the opportunity. My first question is on our Q4 sales number. So if I'm looking at revenue from operations for standalone operations that declined by 11% and console, our revenue declined by 18%. Firstly, can you throw some lights on that? Why consolidated sales declined by 18%? Is it primarily because of KTM only, or we had a slowdown from rest of the accounts as well? That is one. And the second is why there is discrepancy between our standalone sales and consolidated sales. So with regards to that, I would like to understand regarding the kind of inventory buildup which we have done at our warehouses in Europe, and what is the rationale behind it?
No, actually, to inform you that between standalone and consolidated sales, the only difference is KTM, because from our Austrian company, we make local sales only to KTM, and since all of you are aware, in Q4, KTM offtake was plain and simple zero. So eventually,
Okay.
as compared last year, fourth quarter, so there was a decline. So eventually, since standalone of Austrian entity was declining, so eventually it will have a decline will be reflected on the consolidated sale also. So it's primarily
Okay.
because of.
Okay, and just to confirm, from European warehouses, we are just supplying to KTM only, or we are serving other clients as well?
Our own company owned, company operated warehouse, we are serving only KTM.
Okay.
Thank you, Mr.
That is
Ramani.
one. Just a minute. I had another
Yeah.
question as well. So during the last quarter, we gave a guidance for FY'26 that our revenue will be 500 to 525 crores. Just to confirm on that, are we still maintaining that guidance? And if we are maintaining it, can you split the growth segment wise as well? What kind of outlook we are seeing within two-wheelers, recreational vehicles, PVs, CVs, and tractors?
I think probably if you can throw some light on this.
Can you hear me? Hello?
Yeah. I can
Yeah.
hear you.
Yes, that guidance was disclosed, I think, beginning of this year in terms of calendar year. The growth from this year, as you know, we have closed around 420 crores. So we are targeting to still target 500 plus minus. I think 525 plus minus 5% was the estimate we give. How it will be achieved? We are getting good signals from the commercial truck segment. That is something which will grow as compared to last year. As you also see, the domestic business this year, the split was 68 to 32, which usually hovers around 75 to 25. So that means from domestic market as well, some of our old horses are showing good signs of growth. And there are some new platforms which we, of course, disclosed in the earlier call. There is going to be some huge prototyping from them, and that will account for this growth in these areas. Two-wheeler market in general, since you know it starts from Diwali quarter onwards. So those, as of now, customers' projections are intact. Of course, how the projections deliver when the quarter comes closer is to be seen as per their sales segments. Since a lot of this estimations are passed on from us, from our customers. So as of now, our end customers, whosoever have projected are honoring. Some of them are showing growth in the domestic and exports both. But during the course of the year, how this pans out will depend a lot on customer, their own performances as well.
And next year as well, we are assuming similar split between exports and domestic, or that will be changing in favor of exports?
So it should remain like this. Sometimes it will be 70, so it's around 70-30. It can be 72 or 30-28, but it will always be 75-25 plus minus few percent here or there. Export will always be a primary chunk.
Okay, then can you explain within domestic market where we are seeing 15% kind of growth?
Some new clients we are discussing. We are getting good response. A lot of these original Indian companies are now wanting to target premium segment, so we are getting some good responses from them. And in general, exports as well. Some new business rotations we have. So it's a mix of both new and the existing, whatever, these ZF and BMW car projects. All of them right now are in their early incubation stages. These are very futuristic technology products. So as the years cross by, their volume will increase on their own. So investment which we have done in 22, 23, this year, whatever we could not grow, all those in next 2 years, 3 years will help us get good organic growth. And second is new business growth as well. New business conversion and then growing.
Right. Last point from my side. What is the capex which we are planning for FY'26? And can you comment a bit on that as well? So our closing balance of FY'26 should be somewhere around 220 crore, or we are planning to fund capex partially by debt?
Yeah, so currently the plan is so as we have said that this our closing debt of 31st March 25 was close to 300 crores. The preferential money, the corporate expenses have been utilized to reduce both long-term and short-term debt. The capex plan as of now, still finalizing it, but capex plan as of now is close to about 45 to 50 crores for the current financial year. And as of now, the plan is to fund it 75% by debt and 25% by the company's equity. So that's the plan. The close. So accordingly, you can calculate the debt figure and which will be there.
Okay. Thank you so much for the responses.
Thank you.
Thank you.
Thank you.
Mr. Preet. Mr. Preet, we have unmuted you.
Hello, am I audible?
Yes.
Yes.
Yeah. Sir, I would like to know about the entire journey from business point of view. What has changed, which has shifted your margin earlier, which used to be 13 to 15%, which has now grown in the line of 20 to 25%. And is there any further scope of improvement? And if there is, what would be the major drivers which would be driving this growth and margin improvement?
That question was maybe asked by somebody else. If you go to the call recordings, exact answer was there, and we explained very diligently why the profiles changed, why the margins increased. If there's anything which is unclear, we can of course re-answer. But the entire experience is always available in the public domain.
Okay, if you could just tell me when it was it was in the previous con calls you are telling.
Maybe last quarter or last to last.
Okay.
First of all, margins have not significantly changed. They are always range bound. Even EBITDA margins, we always say range bound with 20 to 25%. So earlier was 24%, now it's 22%. So nothing can be very, very straight line. So some minor changes here or there are always there. So nothing has gone abnormally low, nothing has gone abnormally high. So we always maintain our initial call recordings and initial discussions that margins will generally remain between 20-21%, 24-25%. So last year was about 22%, before that was 24%. So 1 or 2% here or there, and last year was generally a very flattish kind of revenue was there. So that was the reason. But despite of all things, we have still been able to maintain 22% margin, which is a very, very healthy margin, keeping in view the overall business scenario.
Okay, got it, sir. My next question would be if you could just brief about the current capacity utilization and your peak capacity utilization, means how much revenue you can maximum top line you can do from the current capacity.
Good question. Definitely, it's the food for thought for everybody. But yes, what happens, we have always maintained that this company, our business model is we always work with premium market, niche segment. So eventually, many of the products are seasonal in demand. Many of the products are having some geographical fluctuation and all. Yes, but if everything is really going in a very, very optimistic way, with our current capacities, definitely the plan which we have given 525 CR for this year, this is definitely being done from out of our existing capacity. And we always have about 5 to 10% additional cushion for taking care of seasonal demands. So now it all really depends if all those seasonal demands or those short-term peaks in the demands, they really get together. So this 10-15% cushion which we keep it, that always can be encashed. But otherwise, the current our range bound numbers for this year, what we have planned, the capacities are already aligned as per that. Whatever investments we are making this year, they are for the future years. Nothing we are investing in current year is for the current year's production. Current year capacity, we already have it. And as I explained, what 525, 500, 525 we already said. So you can say 10% is a cushion. So you can rest, you can understand what kind of capacity utilization we are having and what kind of cushion. This 10% cushion will always keep for some future products and taking care of some seasonal variations and all.
Okay, got it, sir. And in follow-up for the same question, like you have been maintaining guidance of 1,000 crores in next 3 to 4 years, and you told that you have a capacity, extra buffer capacity of 10 to 15%. So, how much more capital you have to raise for the same in the next 3 to 4 years? What would be the ideal capex you will be requiring to reach 1,000 crores over the period of time?
I think we are repeating these questions. Earlier also, we were already said that about 50 crores we are investing this year. We already have given in our earlier calls also that for taking care of our at least next 3 years capex, we need around 150 crores of capex required, which will take care of our growth strategy. But it all depends on year-to-year basis. One cannot really draw out very, very close capex numbers or close sales numbers because today's world is very, very volatile. Sometimes it looks, oh, everything is going 25% plus, and next day it feels, no, it's not going to happen that. But yes, we have already made this general uh, forecast in the previous discussions also. And our roadmap is, say, by 29, 30, 20, 28, 29, we should be around 1,000 crores because this is the initial vision which we have drawn. And for which capex, as I said, 50 crores we are investing this year. Now it all depends in coming years what kind of products come to us, what kind of demands are there. So eventually capex will be planned on a year-to-year basis.
Yeah, got it. Next question on the line of order book. What?
Please restrict our questions to 2 to 3, please, because there are a lot of other investors.
Yeah, because there are other people also.
They are waiting.
So I think we have to.
If there is anything, you can send to us an email and we'll respond to
Yeah,
you.
Okay, sir. So should I ask one more or should I join the queue back?
Now, since you already started saying that we should, at least for, you can ask one, but we should always say that maybe two questions each person. Okay. So you can still ask since you already started.
Sure.
Yeah, please.
So I would like to ask on the order book, what would be your total order book and its execution period? And if you could give the breakup component or OEM wise or the industry wise.
These are our confidential documents. Normally, order book for the lifetime we never disclose to our. First of all, these are very, very confidential numbers, and secondly, these order books are generally a kind of forecast. So they are non-binding forecasts given by the customer, and we as a company never disclose these order books for the project life. One thing is very clear that wherever we are working, we are always working for the complete project and work as a single source for the project. But disclosing the order books, we don't feel that this reflects the true picture. Many times these order books are just given as too optimistic numbers. When Ola started a company, he says okay, he will start producing 1 million scooters from day one. And imagine if his suppliers say, oh, he has an order book of 1 million and Ola is not producing 30,000. So then definitely that becomes unuseful. So that's the reason company has a policy, RACL has a policy, has never disclosed his order books for the next 5 years, 10 years. We always work on a year-to-year based plans and a range-bound forecast for next 3 to 5 years.
Yeah, thank you for taking my question. I'll join back in the queue.
Thank you, dear.
Thank you, Mr. Preet. Mr. Saket Kapoor.
Allow mic करो.
उन्होंने
हेलो जी मुझे
Yes, Mr. Kapoor.
yes sir धन्यवाद sir for the opportunity sir firstly when we are looking at your standalone and the console number on a consolidated basis the revenue is lower at 87 crore from revenue from operations so what gets knocked out in the consolidated part that the revenue is on the lower side. And second question was that there were some factors, I think so, there was some cutting machine issues was there, then there was some cancellation of orders, and then there was some inventory pile up for the previous year, for the previous financial year, due to which our revenues were flat, and also we have incurred some expenses on account of that. So are we over with all those issues pertaining to the last financial year, sir?
Mr. Saket, it is a repetition of question. We already explained a few minutes back that in consolidated and this inventory pile-up was only because of KTM's fiasco. You know, KTM stopped production from October. So from October till March, our sales was almost zero, whereas our stocks at warehouse and transit, they were already there. And we had a lot of WIPs also. But our CFO already explained you that we have already started receiving the orders, but we are taking a very, very cautious view for next 6 months to 1 year, which way KTM really takes the kickstart again. But keeping in view, Bajaj infusing almost 8,000 crores, so we are keeping a very, very positive view. But while planning, we are working very, very conservative. But yes, you are right. This inventory pile-up was generally because of KTM. So we have already explained in details before also.
And you are explaining that this inventory will get liquidated as and when things comes to normal from the KTM.
Yeah. Yes. It's over a period of time it will get liquidated. We already started getting firm orders. But only thing is KTM is restarting full production with a proper plan somewhere after summer vacations, maybe end of July or first week August. But the exact numbers, we have started getting the confirmed orders. But the exact numbers will be reflected in coming time. You know, you can also understand a company which is lying dead for last 6 months and not producing anything, and suddenly we can't expect that it starts producing with full blast. Because they have to also manage all the supply chain. Because once supply chain disruptions are there, so it's not that only RACL suppliers, they may be having 1,000 other suppliers also across the world. So they have to realign all their strategies. So it will take some time. But yes, over a period of time, everything will get back to normal.
Just to conclude on this KTM part, what was the contribution from KTM for FY'24, sir, in terms of the revenue pie? How much have they contributed to our sales?
Because 6 months was zero, first 6 months was, I think, only.
I'm talking about FY'24, not 25.
About 6%. Normally it was always 14-15%. This year was about 6-7%.
No, he's saying FY'24, which was about
10-12%.
मतलब पिछले साल तो
About 6.
हाँ सर पिछले वित्त वर्ष की बात कर रहे सर मार्च 24
total max
15-16 था, it's about 6-7. Because normally KTM until FY'23-24 we are producing almost 15-16% of our revenue was coming from KTM. And if I include CF Photo also, because that is also a KTM joint venture, it was around 20-21%. But in FY'25, which we already lost 6 months, this was only 7-8%. So you can say about 12% of our revenue. To be very honest, we closed our figure at 427 crores. If this KTM fiasco would have not occurred, we would have been a 500 crores company. So you can really make a calculation. This much revenue company lost because of KTM fiasco for 6 months of non-production.
My second question will be, sir, then on the basis of this 525 crore revenue, we are taking into account the contribution from KTM, again back to that 15-16% at least volume growth. Otherwise, we are
Obviously,
not
no.
expecting that.
Very minuscule.
Very minuscule. Very
Very
minuscule.
So this number of 520 is excluding KTM contribution. वो जो आएगा, that will be a buffer for us.
Not excluding fully, but taking some conservative views, because it's not zero, but it's not 16% also. We're taking a very, very conservative view, and if that really, because what conservative view we have taken, for which we have already got confirmed orders from them, because they have to also restart. And if anything, there is a windfall, so eventually it will be our gain. But so far, we are also taking very, very precautionary approach.
Okay, sir. Sir, I will join the queue for 2 financial number, or I will mail later on. Thank you, sir, and
Okay.
all the best.
Thank you.
Thank you. Mr. Ujjwal? Mr. Ujjwal?
Am I audible?
Yes.
Yes, sir. So my first question is on the KTM side only, just extending from the previous participant. So I just want to confirm this, that if given that the situation for KTM is stabilizing, if they go into full-blown production in this year, then whatever numbers, additional numbers that we get from there, that would be over and above this 525 crores. Am I correct?
Mr. Ujjwal, we already explained that KTM, we have taken some conservative view while deciding this figure of 500 to 525 crores numbers. Now, as on today, I cannot make any forecast but which way the KTM has to grow. But yes, whatever numbers we have taken for KTM, we are very sure that at least those numbers will get mature. Now, if anything comes more than that, definitely we will really see if it really comes to our advantage. But we have our own internal feedback that whatever numbers we have taken, there may be few crores here or there is going to change.
Got it, sir. Got it. Also, I just wanted to check on the margins that you have said that the margins remain in 20 to 25% range. But since we have a high margin segment that is prototyping, which is going to happen in FY'26, can we expect that they can maybe tend towards the higher range, so like 23 to 25%?
Sorry, your question is not clear.
So I am asking whether since we are having a higher margin prototyping revenue coming in FY'26, so can we expect that the margins would remain towards the higher range of 20 to 25% that you normally guide for?
Your wishes are always with us, and we'll always strive for getting more and more better margins. Yes, we all are working for the same, but eventually, this is beginning of the year, so we can't really predict which way the margins have to go. But yes, definitely, as we explained, that we are keeping very, very optimistic view. And since we have already raised some fresh funds, we have already paid back the long-term debts, short-term debts to the banks. Eventually, our finance costs will go down. So all these things are showing very positive outcome. And in prototyping and all, some projects here or there keeps coming. So definitely, we are keeping a very optimistic view to improve. But your wishes and support is always required to maintain these higher margins. Yes.
Sure, sir. Thanks. Just one last question. What can we expect the interest cost for FY'26?
This JJ, if you can answer, yes.
So
I'm not good at the financial numbers.
So it was around 7% in FY'24-25. We are expecting a improvement by at least 1.5%.
Okay. So basically, like if you can quantify, like it was 30 crores in
I will
2025. So
पूरा reduce किया उसको impact पड़े.
Sir, वो depend करता है because domestic funding पे पड़ेगा ना, हमारी export funding का basically.
Reduce CRR also.
Yeah.
Anyways. So
about
I also
Ujjwal,
put
you may
pressure on
calculate,
JJ.
we are expecting a saving for 1 to 1.5%.
got it. Okay. Thank you. Thank you, sir.
Thank you.
Thank you, Mr. Ujjwal. Mr. Prateek Jain. Mr. Prateek Jain.
Yes. Am I audible?
Yes.
Hi, sir. Thanks for the opportunity. So my first question is, if I look at your working capital days, obviously for said reasons, they have been stretched now to around 221 days. You had earlier indicated that over time, you will like to normalize it to a 160 days. Can you help me understand with current scenario, where do you see this working capital debt settle in the medium term? And do you still feel that we can achieve this 160 days target?
How do you calculate this 221 days?
I think it's not
Sorry?
221.
How do you calculate this 221 days?
I calculate it as a percentage of sales overall.
That's incorrect. You have to also consider anyway.
160 days.
Yeah.
So,
Prateek.
Yeah. So Prateek, as we have explained earlier, so as per our calculation, based on the turnover days, debtors and inventory days based on turnover, and the working capital cycle is coming to around 160 days. Now the debtor days and inventory days have gone up a bit in FY 24-25. Debtor days have gone up obviously because the turnover which RACL India has done to GmbH. Now the payments had not come on time from GmbH, so that is why that was one reason. Secondly, over the last 2 years, the shipment period overall after the Red Sea crisis and all have gone up. Earlier, the shipment period to Europe used to be about 60 days. Now it is about 70-72 days. So about 10-12 days of overall shipment period has increased. So that will remain. But then, and the slowdown of which was there in Europe and all, so because of which from the warehouses, the pickup of the material was slightly delayed. So these were the three main reasons for increase in debtor days from FY 23-24 to 24-25. Now, out of which the 10-11 days of shipment period increase, that's a global phenomenon that will remain. The GmbH has the payment has already been done to RACL India, and then apart from that, the since the pickup from all the European customers have improved, so debtor days have already started showing an improvement trend there. So that is there. And secondly, on the inventory days part and all, basically we had, if you look at the breakup of the inventory and all, one of the component for our inventory is loose tools and jigs and fixtures, which have to be procured at the beginning of the year based on the forecast for the year. Since the forecast for the last year was close to 500 crores, so the tools and all were already procured and all. But because of which but then unfortunately because of the KTM fiasco and all, that overall turnover could not be achieved. So that because of that part only the inventory days have gone up. But now the turnovers have already started picking up and all, and with the current year projections which we are having and all, the inventory days will also fall in place.
Okay. Thanks for this detailed answer. So just to confirm, if you can help me triangulate my numbers. What's your debtor days and inventory days as of FY'25?
112 days of debtors and inventory days of 110.
And you calculate this as a percentage of sales, right?
You drop me a mail, I'll answer you on that. I think for the benefit of everyone and all, I think for the time and all, calculations and all, we can discuss on it.
Got it. Got it. I will take this offline. Thanks.
Thank you. Thank you. Prateek Kothari.
Mr. Kothari. Mr. Prateek Kothari.
Hello, Mr. Prateek Kothari. Prateek, can you hear us? Can you unmute yourself, please?
See an option.
Allow my computer.
Mr.
Prateek, you have to unmute from your side.
Q&A box. Mr. Pratik, you may type your question in Q&A box.
There are no members? Yes. Okay.
Excluding of KTM, anything else that was below expectation this year? How was ZF and MAN truck scaling up? So the question, so I'll repeat the question for everyone. Mr. Pratik Kothari has asked, exclusive of KTM, anything else that was below our expectations this year? How are ZF and MAN scaling up?
Yeah, first of all, I'm glad to share that MAN is really has given us very good forecast as compared to FY'25. In fact, in FY'25, MAN had produced, because they always work calendar year, but they produced 53,000 trucks. This year, they have targeted 65,000 trucks. So this really shows almost 20% of increase as compared to last year. And this increase in demand is already reflecting in our pickup and our further call-offs. Yes. ZF is still some models, they are doing very good, but in some models, they are still catching up. And I feel it will take, we have to wait for at least 2 more months to get a real picture. Particularly for the American market, things are still not to the optimum level. So ZF is wait and watch, but MN is very, very good. I hope we have been able to clarify.
Yes, sir. This was the question.
Yeah. Okay. Yes, sir. So that's it.
That's it.
So if there are no more questions.
So any other questions? Any other question from anyone? You can drop us an email and we will respond on the same.
I would now request CMD sir to end the meeting by his ending remarks.
No, thank you, gentlemen. First of all, as I said my opening comments, that we really always feel thrilled to interact with you guys. It really gives us lots and lots of insight. And for the investor call, our team has to prepare at least 1 week in advance. So it really shows that there is a lot of enthusiasm towards this phone call. And we really look forward for your valued contribution. And I will say, ask as much questions as possible so that it keeps us, all of us on our toes. And it really keeps us motivated and inspired to put up our efforts to perform continually in a more and more better way. So thank you once again to all of you for joining this call, and we keep interacting. Anybody has any queries in between, you are always welcome to approach us. We are always open for more and more interaction with you. So wish you all the best once again, and thank you for joining this call. Thank you.
Thank you. Thank you, everyone.
On behalf of the management, I would like to sincerely thank all the participants for joining and engaging with us today. Your participation is greatly appreciated. I would also like to extend a special thanks to the management team for their thorough and patient responses to all the questions raised during the session. Thank you, everyone.